So the rules, the way it's going to work, we've got 5 projects and pitches that are going to present. It's going to be boom, 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 boom. Each one gets 10 minutes. Mfundo's ruthless. I'm bad, but you're worse. 10 minutes, mid-sentence or not. It will be in this order. This audience needs to pay attention. We have 3 judges who are going to watch and consider and reflect. And then they're going to comment at the end at the end of each one, a short feedback. And there'll be an opportunity maybe for a question or 2, but we got to keep it tight. And at the end of the whole section, a conversation around the overall impression of the pitches. It's the job of every table to vote, to judge, to decide who is the best. Can I say that? I always trip on that word, the best. Who is the very goodest? Who has something that seems like it's a feasible pitch? And then and why? And then secondly, who's the runner-up and why? I've got slips of paper, 1 per table, and as a table you will agree. We will collect those at the end and very quickly tally them up. Okay? So the audience is the judge, and then we have adjudicators, 3 of them. Can you introduce the adjudicators?
Will do.
Great.
Thanks, Kersha. And I'm not as bad. I try and keep to the task at hand. So, just want to quickly, Mutao is, Deborah and Jumuke are our judges. Are they here? Hello, Deb, Jumuke, Mutao. Okay, cool. So, if anyone has ever watched the Dragon's Den, this is what we're doing. And the essence is, and why we conceptualize this, and thank you very much to the board and the Secretariat for the conceptualization of this particular part of our conference. And the reason why we do it is to try to get everyone around the conference to understand what it takes to take a concept to a prospective investor. There are certain important elements that investors are looking for that makes a pitch, sort of investable, and the sponsor and how they portray themselves, their project, and especially the financials and the projections. So, just to the presenters, please get to the meat as quickly as possible. We know you love your projects. We want to understand them. Don't spend too much time on one element of the pitch, and ultimately get to the numbers. What is the investor putting in? How will they make their money back? Cool. And my favorite part of why I'm standing here is when your time is up, I will stand up. You might not see me because I'm short, so I will make sure that you know me and hear me. Okay, cool. So, I think everyone's sort of affair with what we're going to be doing. You are going to be voting, and I'm not afraid to say the word, for the best pitch. You have to vote for your best pitch. We'll collate all the votes, and then we'll announce the winners. Deb, you understand this better than I do now. You've been in the hot seat far longer. Okay. I'm going to want someone to keep time, to keep me honest. Last year I got into trouble because I wasn't keeping time properly. Okay. So who's going to be my keeper of time, or the keeper of time? Okay. So let me go to my watch and make sure that, okay. So let's just, it's Tuta Jeng rentals. Please, please, please forgive me for the butchering of the names. That's the first one up.
Yeah, that's the start, right? So, no?
I'll tell you.
Okay, because... No.
There's a clicker there.
Thanks. So I just go to the next one, right? Yeah.
Okay, and your time starts now.
That's fine. I'm not intending to take over your work, but I'm just going to time myself as well, because it's always good to know your own pitfalls. One of mine is timekeeping. So today I'm going to pitch to you a new business model by Easy Housing called Tutajenga Rentals. It's a very exciting model. It's about low-cost, high-quality homes that have all the advantages that our high-end homes have, but at a very sharp price point to make it affordable to people who now largely live in informal housing. So I can say to Mr. Joseph as well, it's true we haven't talked about informal housing yet, but I've tried to keep the best for the last. And of course, as everything what Easy Housing does, this will be sustainable, social and scalable, using timber framing, gender equality throughout the value chain, affordability, job creation, and scalability through our standardized prefabrication process. But before I jump into the details, I want to briefly tell you something about our founder's journey and about what Easy Housing has achieved so far. So we have celebrated our 5th anniversary this year, and Easy Housing was founded by Wolf, whom many of you might know from other conferences, other AUHF conferences. He's currently in London at the Build by Nature conference, where we were also invited to talk about sustainability in construction. And Wolf approached me 5 years ago to co-found Easy Housing. Now, I didn't have to think long about that, because Wolf and I, we go back for many years. We know each other already from university, where we used to have great ideas about how to change the world. He founded a timber construction company in the Netherlands, which is now a scale-up in Europe, Sustainer Homes. I chose a slightly different track. I went into politics, was a policy advisor, member of parliament for the Dutch Green Party, and then at some point I got bored by the talking and the bureaucracy. I wanted action where it came to climate justice, social justice. So I decided to go into the development sector. Got bored there at some point as well, mainly also because of the aid dependency. I really believe we have to develop sustainable models to bring about justice, social justice, climate justice. So when Wolf approached me, I was actually very eager to co-found Easy Housing with him, to build a social business that would bring ecological sustainability and dignified housing to as many people as possible. So the challenge, I'm not going to dive deep into this, because we all know we've been talking about this for the past 3 days. But one thing I would like to stress here, where it comes to the challenge that we're trying to tackle with Tutajenga Rentals, is that a large part of the informal rental markets in Kenya and Uganda, which we are targeting with Tutajenga Rentals, these are informal markets. And I don't know how you feel about it, but I feel that in conferences like this, we're not talking often enough and well enough about the success of the informal business models. Of course, there's a lot of bad stuff about it. I'm not going to defend slumlords here, don't get me wrong. But if we talk about making the numbers work, they somehow found a business model that works. And we haven't. So I think there's a lot we can learn from them. And with Tutajenga Rentals, we're really trying to build on the lessons of informal markets. So the solution, we will deliver Tutajenga rental homes at very sharp price points. I'm going into the numbers very soon. With affordable, fast construction cycles, we're talking about a construction time of 2 to 4 months per home. Inclusive offtake solutions. We have some already. In Uganda, we have a partnership with the Housing Finance Bank to pre-finance homes through green home loans to our clients. But that's not enough for us. We really want to aim for the base of the pyramid, and that's why we're developing Tutajenga Rentals. An important element of this proposition is also the design automation, the low capital expenditures at which we can make this work. And then, of course, as said, it has all the sustainability advantages that our high-end solutions also have. So what we've achieved so far, we've built projects in 5 African countries, sold 69 homes. mainly to B2C clients who can buy the homes off plan. Now, I think in a way that's great, because we've managed to make timber housing an aspirational product in markets like Kenya and Uganda. In a way, you could say we are the Tesla in the housing sector, which is great, because that's a great market entry point of view. But to be honest, that's not why Wolf and I founded Easy Housing, and that's not why I left politics and the development sector, because that's not the social justice I want. I really want to achieve that base of the pyramid, and for that we have to build innovative models that work for more people than the apex model, for the apex of the income pyramid, which we currently have. So we have a team of 60 plus people, 6 nationalities, a strong advisory board with, among other people, the great Etta Medete, which you all probably know, won several awards. Tutajenga Rentals now, let's go into the numbers. So Tutajenga Rentals, as said, it's an affordable rental model. It builds on our proprietary timber construction knowledge and automation, but it also draws many lessons from the rental market. So what we're actually developing is a model for urban infill construction at standardized plot sizes of 1/8 acre, where we expect to build homes which we could rent out for 120 to 150 USD per square meter, per home, and the construction price would be 150 USD per square meter. So the rental price would be 120 to 150 USD per unit for the end user. It's a peri-urban solution, so these are one-story homes. You could say they are semi-double story because we include a mezzanine in it. And as said, the fast development cycles are one of the big advantages. So these are the numbers, right? We expect there is a TAM of 4.5 million, given the housing deficits in Kenya and Uganda alone. 80% of that is low and middle income, which we're targeting. And we expect that we can cater at least 10% of that. So that would be 350,000 homes. Of course, not tomorrow, that will take some time, I'm getting there. But we expect that that is actually the sum where we can get at. The competition, low quality informal rental units, as said, a large demand is actually not catered for, and mainstream construction is often polluting. So this is a render design of how a Tutajenga neighborhood would look like. As you can see, we would use roughly half of the plot for construction, because we really want this to be also a green space where children can play, where we have space for urban green, because it's good for people's mental health, of course, but it also creates water storage, which is an important climate resilience element. So of the standardized plots of 1/8 acre, as mentioned before, we will use roughly 50% for the units, and the other 50% will be public, largely green spaces, playgrounds. So this is how the operational model would look like. Now, for the pitch, this is a simplified version, right? Because, like the SPV, it's likely that the SPV will actually be split in several SPVs. One for the development, one for the rental management. But it's a simplified SPV to show you how the blended finance model could look like, or how we envision it to look like. So we're looking for investments, both equity and debt, to make the model work. We're looking for a blended finance model to pre-finance the homes. So what we would do with the money is we would buy the land, we would develop the land, and we would build the units on them, and we would rent them out. Now, in theory, in the long run, there are a lot of more innovative approaches possible, like tenant purchase schemes, rent to own, but we deliberately decided to keep as close as possible to the informal rental markets and to start with rental, because there at least we have a lot of data, we know how it works, and the model, to pull it off, is complex enough in itself. So we're sticking to this proven model, but we're very open to different modalities in the future. So what we're looking for, the ask. So we have a modular capital ask. We've done a feasibility study. We did prototyping. We're now looking for 300,000 USD concessional loan or grant to actually do a pilot of 12 to 18 months with 30 homes to test key assumptions. And this pilot stage would also enable us to get ready for the growth stage, in which we would like to deploy 3 million in depth and equity. You can see the numbers there, which would then eventually grow into a scaling phase. Yeah, so we're looking at the price per home, including land and development of 10,000 USD, a monthly rent of 100 to 150 USD, and an expected IRR of 15 to 20%. That makes 10 minutes, so thank you very much.
Well done. Your time management, great. Your outfit almost looks like mine. Where's the photographer? Where's the photographer? He's busy on his phone, this guy. Yeah, green. You know, happy socks. You know? Yes?
We both like colors.
Absolutely. Cool.
Do we get the questions now? Yes. Yeah, okay.
Yep.
Yeah, sure.
2 questions, max. Yes?
Are we doing questions or comments?
Comments after the questions.
Okay, questions.
Question? There's a question over there.
Question.
Sorry, mate.
And who else has got the mic?
Yeah, thank you very much for the beautiful, amazing presentation. And actually, this is a unique project. But my question is, in Africa, is very natural. It's nature. And sometimes when you build a wood house, then it's very difficult to deal with the moths and also wood worms. How do you deal with that situation? That's my question.
Yeah, thank you. Those are good questions. So the timber frames, so the timber material is treated against termites, other vermin, and also for fire safety. And then in addition, in the design, we also have measures. Like, for example, the homes are always elevated for flood resilience reasons, but also to not have direct contact between the timber and the soil. So we've actually done some field tests where we've put our timber on termite holes, and they wouldn't touch it. They don't like the chemicals.
There was another question. Yes?
Thank you. Hi, Niels. A quick question. You mentioned about making timber aspirational. Timber, I get it from a climate resilient perspective, and this is a conversation we've had. However, for many people, it still will, it would still be viewed as a technology for the poor, especially when you look at rentals. If you look at informal settlements where it's cold, that's the type of technology you'll see there. So I'm curious to see what it is that you're doing, you will be doing to shift those perceptions. It's one thing to say it's aspirational, but it's another thing to actually put some clear behavior change communication approaches to sort of change that perception.
That's a good point. Well, actually, the point I was also making is that, like, actually in Uganda and Kenya, we've made it an aspirational product. So we see that, like, high and middle income people are buying it. Usually not for sustainability reasons, to be frank. Usually because of other USPs. Our fast construction, for example, the fact we're a one-stop shop. Having said that, I agree with you. Of course, thought leadership, advocacy, awareness raising, all of that is also needed. We're also doing that. But in parallel, I think it's also just crucial to have a strong, high-quality product at the price that people can pay. And then at some point, the material is not that important anymore, in my experience, because people want an improved home. And you can do all kinds of things, right? You can plaster the walls, and we do things like that to not make them look timber, but yeah.
Thank you. No more questions. Comments from Deb, and then we go to the next project, which is Empower Imizietu. That one I can say because it sounds Zulu.
Okay. I thought the slides were clear, and the mix of photos and visuals that was good, and it blended well with your conversation, with what you were saying. You made very clear your DNA, as far as mission focus. I like the fact that up front you mentioned low capex, because low capex usually means better returns. But I think maybe a little too much time spent on the development impact stuff. I think you made a very powerful point about it early on, and I think I would have devoted more time to the latter part of the presentation, show where your investment has occurred so far, show what you've got, skin in the game, and then I would have had a number of questions left behind about, well, have you ever managed rental property before? You know, what more specifics about how do you know that these numbers work?
Thanks, Deb. And well done.
Putting it here? Yep, yeah, thank you.
And on to the second one, which is empower. Imizi yetu. Imizamo yetu. Imizamo yetu, sorry. Imizamo yetu. Who's presenting? I'm not sure. Okay.
Hi, everyone.
Clicker.
All
And
right.
the microphone so that you can.
All right. Let's just see that it's there. See it's working before we start. Yes, absolutely. All right. Good afternoon. Is the time starting? Right. So Urban Think Tank Empower is a non-profit company with public benefit status. I think that sets us apart from a lot of the other typical property developers. We were only officially registered in South Africa as a company in 2022, although we've been working in housing for the last 13 years or so. I'm here today to ask you for a 90 million rand impact investment for our next project, but I first want to show you what we've done to date. So this is Site C, Kailicha, a settlement called BBT Vukani, and that is what it looked like before we intervened. This is what it looks like today. We are currently busy with construction at a site just down the road, BT Vukani, and that's how it started out. And on completion next year, it will look like this. We believe that a house is more than just four walls and a roof. We believe in an ecosystem, and through the model that we have created, we impact on 12 of the UN Sustainable Development Goals. So what we do is we address other critical urban challenges. Through community participation processes, we know that there is a need to incorporate play parks, sports facilities, urban farms, and learning centers, early childhood development centers. So the next project in our pipeline is in Imizamo Yetu in the Southern Peninsula in the suburb of Hout Bay. Imizamo Yetu is a densely populated township. It was ravaged by a fire in 2017, displacing about 10,000 people and destroying 3,000 homes. We are at the moment with our partners, the City of Cape Town, busy on a landscape-based master plan for a large precinct in this township. This is just a concept drawing for that. We hope that on completion of this project, we will achieve something like this. From a town planning perspective, there are, it's about 9 residential sites in this precinct, over 46,000 square meters. We will, at the end of the day, be able to deliver approximately 800 homes. First up is phase 1. It's 2 sites, Site 1 and Site 2. They are just over 7,000 square meters in size, and they're greenfields. So this is something new for us. We are used to developing existing occupied sites, so we're excited about the opportunity to take a product to market and test a slightly different model from what we've done previously. On completion of phase 1 and 2, we would have delivered 155 homes, impacting 470 individuals and created 500 jobs. There's also 11 commercial facilities included in this development. You will see, most importantly for today, the total investment cost is 135 million rand or $7.5 million. Again, just a reminder of our strategic goals and all the elements that will be incorporated into this project. So yes, of course, the project is higher. The project cost is higher because we're addressing all the other urban challenges I spoke about previously, as well as climate resilient homes with renewable energy solutions incorporated. I'm going to show you quickly a few renders of what it will look like. There you go. Coming to the blended financial model, we have already secured 30% grant funding. This will essentially be our equity contribution into the project. We have a long-term funding partner that we've been working with for 10 years, and they trust what we do, and they believe in our vision to change the look and feel of South Africa's townships. We will need 70% impact investment. For the purposes of this presentation, I have looked at 6% interest rate repayable over a period of 6 years. 2 years of that will be construction, and there will be a rental period of 4 years following that. We also concern ourselves, of course, with end-user finance. Affordability is hugely important. So we will offer a rent-to-buy pathway in this instance, especially where people do not qualify outright for a mortgage. Currently, we are looking at a rental period of approximately 4 years. Of the rental income, 20% will contribute to a deposit as a down payment for the eventual purchase price. Of course, we are aiming at an income bracket of below 22,000 Rand a month, which means that the first home finance subsidies will be applicable to this market, further improving the affordability. Process flow, I've already kind of touched on this. I only want to point out that we will be providing training and mentorship during the rental period because we need to ensure that the credit records are in place so that people do eventually qualify for their mortgages at the end of the rental period. Subsidized sales prices, just to give you an idea of the typical layout of each of the units, you will notice that the 2-bedroom and 3-bedroom sizes are bigger than what is typical in this market. And that has come out through a whole research process that we've done with our Norwegian research partner and from community participation. The prices there are already subsidized by the 30%, which is our equity contribution. Evaluating the impact, this is just to show you the impact of the FLIS subsidies and the deposit saver on the overall project. You will see that qualifying for a mortgage of 490,000 Rand is significantly more difficult. And by applying these subsidies and the rental deposit saver, it reduces that cost by about just over 30%. And of course, it lowers the income level required to qualify for these mortgages by about 25% to just over 11,000 Rand a month for a typical 1-bedroom unit. We know that this will work in this area based on the research and the market research that we have completed. This just shows you how the numbers stack up for each of the housing units and how the sales prices are put together. This is an interesting slide for me because, again, it goes about end-user affordability, and you will see that the mortgage requirement at the end of the rental period will in fact be lower than the rental amount at the end of year 4. The rental only escalates by 5% per annum and not the usual 10% that we are perhaps used to, but it is again done so purposefully. Of course, this is a typical payback period. For me, it would be lovely to see a special mortgage product developed by our banks. We often talk about it. I don't really see it happening. I don't understand why we have to pay, if we're talking about solving a housing crisis at high interest rate over 20 years. That is not empowerment. So let's just be honest about that. We need to come up with a better model. From an impact investment point of view, we've said the funding gap is 90 million as it stands. We can repay it through the rental incomes and service the debt through the rental incomes. I've calculated that the total interest over this period will be about 27 million Rand. Of course, it provides us with an opportunity, so we would be grateful for that kind of funding. But the 27 million is also 55 1-bedroom homes at the subsidized sales price. So the lower the interest rate, the more homes we can build. And that is ultimately what we are here trying to do, I think. Through the mortgage incomes, the subsidies, the deposit savers, and the rental income, we can pay back the impact investment. The debt service cover ratio is not huge. I know that it won't work for everybody, but we can provide guarantees that we will be able to pay that back. So why invest in Empower IY? Why not? Right? We can guarantee that we can pay back the money. It will have a massive social and environmental impact. It will literally be a new lease of life for the IY township. And it will be scalable. We hope we can create a revolving fund that can continue until we've completed all 800 homes. We are working with incredible partners, international partners from around the world, UTTE, International Design Office, leading the design out of the New York office, Okra doing the urban design from the Netherlands, and our research partners, and of course the City of Cape Town, who I know is in the house today. And most importantly, the community. They are not on here, they don't have a logo, but they are ultimately the people that we work for and why we do this work. There goes my alarm, and we hope we can change this narrative through this project. We do not want this. On the right is IY, an exact photo of it, but we hope we can change the cover of the Time magazine in time. Thank you very much.
I know I'm only allowing 2 questions, folks, so please. Do you have a question? You don't have a question. Okay, any questions?
It's not so much of a question, but I just want to say congratulations. I love what you're doing. Awesome. I really like it. Thank you.
Thank you, that's great.
There's a question here, Richard.
Hi, again, fantastic presentation. I'm a little bit biased. I live a mile away from that development in Cape Town, so very exciting to see. Question to you, if you got the funding tomorrow, what is the timeline to execute this? I mean, I know the City of Cape Town is here and they're more competent than most in South Africa. What's the planning timeline and what will the construction timeline be?
So as it is, we are planning to start construction next year, of course funding dependent, definitely by June if everything comes into place. The land use approval process is already underway, the building plans is already prepared and ready for submission. So it is just a process, and luckily through our partnership with the City of Cape Town, we can fast track all these approval processes, which is so necessary. Generally, I find that the regulatory system is what's slowing housing delivery down. And it's frustrating because we talk about a housing crisis, but we don't respond as if it's a crisis. We need a hell of a lot more speed.
Thank you. Judges? Where are my judges? Okay.
Question.
Okay. No question from the judge. Either a comment. No question. I will shut you down. I've got power. What a short man with a microphone, Bob.
Comment.
Comment. As a judge.
As a judge.
Thank you.
Thank you for reading out the TOR. It wasn't very clear. Thank you. I think that's a great presentation, and I think looking at it and seeing the figures for the first time, I see you actually have a model that can work. And the question I have for me, not for her, is that a good question?
Technical.
Yes,
Okay.
it's just the emphasis on the rental income and a bit more, I would spend a bit more understanding to help us understand how you are hedging on the rental income. Is it 100% occupancy? Why? And probably the profile of the tenants that you are targeting, just to have that assurance that then they are going to keep paying.
No. Thank you very much.
Get to say anything? Don't I get to say anything?
No. One comment per judge, please. I'll just We've got a very tight time frame here. All right, folks. We are on presentation number 3. It's an initiative by On-Site ICF. Please come through. Your microphone, your clicker.
The next one. Let's use the time as well.
Okay, so are we going to start our time together?
Yes, we can do.
Okay. Your time starts.
Is it here?
Yeah, you can see. Okay.
Okay.
There we go. Your time starts now.
Hi, everyone. I'm Kennedy Mnyendo from On-Site ICF, and I'm here to share with you our solution for affordable housing. We call it the Nyumba Bora Initiative. Nyumba Bora is basically translated as a better house or a fine house. So what we're doing with this is that On-Site ICF is a social enterprise. We are incorporated in the US, Pittsburgh. We have operations in Texas, South America, in Colombia, and here in East Africa. As an East Africa entity, we handle Kenya, Uganda, Tanzania, and we're looking to spread across East Africa. So we all know, and we have seen these statistics across, and we have talked about it through this convention. And what we are seeing is a very huge gap in affordable housing, very huge deficit in housing. And in Africa, we've talked about 53 million, over 61% urban population living in slums. In Kenya, over 2 million people do not have homes. We have a very big deficit. And how do we handle this? There is a big challenge. We saw the PS talk here about policy. We have seen the cost of construction is a problem. We have seen collaborations that are needed. And as On-Site ICF, we chose to look at what can we do as a company. As a social enterprise, we are focusing on affordable housing technology, and we are building our houses with foam block technology. This is embedded in the core of circular economy, where we are using polyurethane raw materials, which would otherwise be waste, to transform this into blocks that will last another 50 years. Now, this product is used in a pole and beam structure, where we reinforce the cavities with concrete and rebar, and in that, we get a permanent house. We are providing this across Kenya today, and we are doing this in a very simple system. This is a system meant to operate with very minimum maintenance, operated by 2 to 3 people, and can operate in remote locations. So we can do it in a workshop setup here in Nairobi, or we can deploy this in the most remote part of the country. We are currently using this in the field with backup generators, and we have started conversations of turning this into a solar-powered mobile factory, and is what we are looking to do with our system. This is a very simple video showing an on-site production where polyurethane is sprayed into the molding system. It only takes 10 to 12 minutes to make a block. In a day, we can make 800 blocks to build a house in one panel. We can deploy a number of these, and we do an on-site training for the local community, empowering them to earn from what they're doing. We also work with TVETs to train them on how to build with our system. This system helps us reduce the cost of construction by 20 to 30%. We are cutting the time of building by 50%. The lightweight nature of these products allows us to reduce the cost of foundation and even the formwork that we use in construction. The technology is not enough. It's just one aspect of reducing cost in construction, increasing the speed. We are blending this with Nyumba Bora Initiative, which is a financial vehicle where we are partnering with SACCOs. And with SACCOs, we've been told how SACCOs are robust in Kenya and in East Africa. They have structured the informal sector to be able to raise capital for land purchase and now building homes. What we are looking to do is to catalyze this so that we are able to get a blended finance where we can lend it on to the SACCOs to be able to provide financed homes for the SACCOs. Now, in this blended finance, we are going to offer it at below market rate because we are making money in the construction side. And in our technology, we also have licensed builders where we can license this system to other builders, contractors, and they can make their own blocks and build. That is how we make our money. This is just a vehicle to enable our communities own homes and be able to deliver on the same. What we are asking for is financing, because right now we have a pipeline of $1 million shillings, which we are going to use for pilot in this last quarter of 2025. We are looking to build 50 to 60 homes in our pilot project, and what we are asking for is for implementation the coming year. With about $20 million, we are able to deliver up to 1,500 units. That is where the impact starts. And if you look at our sweet spot, it's about $19,000 per unit, but we are doing units as low as $2,000. Now, with this, we are doing incremental building, where we can build units as simple as 1 bedroom, but provide designs that can be incrementally built to become a 3-bedroom house. So you can eventually do a 2-bedroom, a 3-bedroom, and you can do the incremental building. This is how we use the ICF system. We have the foam block reinforced, we have plaster on it, we have textured paint, you can do cladding, you can do any kind of finishing in this kind of structure. At the end of the day, this is the kind of building that you get. We are doing single-family homes, we are doing mansions, we are doing low-rise apartments, and we are doing social housing. This system is robust, that it works across board. So far, we were incorporated in 2022 in Kenya, and we have built up to 200 single-family homes, impacting over 1,200 people. We have done 45 schools. We have built a hospital that is serving over 100 patients every day, and we have built an aggregation warehouse for women who are doing coffee. This system is very simple, and we are encouraging women to participate. It's so light that even the skilled ladies are also working in our job site. We are incorporating as many women as possible, and this is just a simple video that will show you how we are robust. This system is environmental friendly. It is sustainable. This is not playing. You check my time. This is not playing. It's environmental friendly, it's sustainable, it's scalable because we can go anywhere within Kenya and across the African continent. And we are not the only one who are doing it. We can license this to other people to also implement this system. I think I have a few more minutes. The timekeeper, my video is not playing. I go back? You pause, eh? I know I'm at 6.5. 6.5. So, can I? Yes, it is. That video is very important because it's the whole technology. It won't play. The first one played. Yeah, it is. Okay, I'll request that, can we play this video after this? I'll share with him a link so that he can play the video. So I can just talk through the, how many, because I think, 2 minutes? Okay. Okay. So generally, I wish that video would have played, because that video demonstrates how our system works from inception to when you get the final product. It's a 2 minutes video, but it demonstrates that it gives you the concept of how this system works. This system is insulated, thermally insulated, sound insulated, water resistant, pest resistant, and with this you get a lot of value proposition. If you look at the costs that we are having for building one of our units compared to what is in the market, we're already saving 20 to 30%. We are not even talking about the additional value that you're getting with this system. We build in 21 to 45 days. To build a house. We have built, the video would have shown you a 10 classroom school, G+1 structure that was built in 8 weeks, from start to completion. And you would have seen different elements. The blocks are just stacking like a Lego. It is very fast, very easy, and even the guys who are working on the job, they feel it easy. Yeah, so that is what we have for the system, and we would encourage you to participate. We are able to work with different people, and I was actually impressed with TAF when they presented, and actually they are good partners for us. We probably would be engaging in this, and we encourage the financiers as well to jump in and let us build more affordable, resilient housing. Thank you.
Thank you very much. Notwithstanding the video and the glitches, great presentation. I'm going to give 2 slots for questions. Yes, please.
Thank you. I have 2 questions. First question is, I didn't catch the return on investment. Second question is the durability, because we're talking different type of building materials. So I was just wondering on the durability and if you had a guarantee as far as in years for the houses that you were building. Thank you.
Okay, on the return on investment, when we get this loan, it's paid back. So what we do is that we are lending it on to SACCOs and CBOs, and I like what, is it Kimani? What he explained earlier about how CBOs and SACCOs are structured in Kenya. They actually have already a system and a process of lending and collecting. So what we are doing is that we are taking advantage of that already established framework. So what we are doing is just to catalyze that for them, because having talked to many people, the kind of SACCOs that we deal with, we have signed 4 SACCOs that we're doing pilot with. One is a farmer's SACCO that is dealing in coffee. The other one is an industrial SACCO, Tetra Pak SACCO. The other one is a SACCO dealing with medical institutions. And the other one is a Boda Boda SACCO. Boda Boda, right? Okada. Yes. So Boda Boda SACCOs. So these, if you look at them, and that is what was discussed earlier, the perception is that it's an unstructured industry. But somehow these SACCOs have structured this industry, and they're very disciplined in terms of fundraising, in terms of saving, and they've already bought land. And that is some advantage that we have. They already have land. We are building in a land that they have purchased, and they're building their own homes. The other question was on durability. This system is a permanent house. We are relying in Kenya and majority of the African countries on Eurocode 2, which has adopted precast building. And ICF is one of the systems that has been adopted. In Kenya, just beginning of the year, we adopted the Eurocode 2, which has now incorporated the contemporary building, new technology into our system. And it has been proven. We've gotten licenses from Kenya Bureau of Standard. We've gotten licenses from Public Works. We've gotten licenses from the Material Testing Department for our system. And having built all these 200 units, we have seen what it takes to do the structure.
Quick question. How much are you looking for? 1. 2 is the blocks, are they just a form? I'm just looking at the video on YouTube. So are they reinforced and filled?
Sorry, I did catch the first question.
How much are you looking for?
How much?
Yes.
20 billion USD. This will allow us build.
20 million for what?
This is going directly into construction. So we are lending this on to SACCOs. So the way we are dealing with SACCOs is that, one, they already have a financial structure. There is a group of their members who are capable of lending and building. So we build with that, and that is in our turnkey arm of the business. In our financing arm of the business, we are looking at those members. They have capability of raising small income over a period of time, but they cannot build a house one time. So what we do is that they pay a deposit of 20%, and then we finance that home. Once we finance the home, they occupy the home, and they pay on a rent-to-own basis. For the technology, foam is a byproduct of oil processing, which is polyurethane raw materials that we use. It comes in liquid parts. This is injected into molds through a panel that heats and ratios this. So they mix at the point of injection. So when you inject, it forms inside the mold and takes about 12 minutes to form the block. During construction, we do what is called pole and beam structure, where the cavities, the hollow sections of the block, are reinforced with concrete and steel. And this can be at alternate holes, and it can be done depending on the structure that we build. In high-rise structure, we combine a frame structure, which is the columns, and infill of ICF. So with that, because ICF is also load-bearing, we are reducing the cost for doing the column.
Yeah,
Judge.
okay. Thank you, Kennedy. Just a couple of points so that you can avoid repeating some of the comments that came. Whenever we're dealing with an alternative building technology, you make sure that you show up your licenses, your approvals, and everything else up front. But thank you very much. I thought that was very interesting. Well done.
Thank you, Chumaka. Thank you very much. Okay. Diaspora remittance-based housing is our next presentation. I had a principal who looked like you. Have you never been in South Africa before? This is your clicker. Microphone. Okay. My timer, don't start your timer before me. You're gonna steal your own time. You set? Okay, let's start again together. Let's go. Thank you, sir.
Good afternoon, everyone. My name is Kautron Simrash Takawira from a company called GGF Africa out of Zimbabwe. We do corporate advisory and management consultancy. And part of the history of what we have done is that we have helped municipalities to raise funding for some of their, through municipal bonds. That was in the 90s. After that, we were part of a team that built public servants housing across Zimbabwe through partnerships with construction companies and landowners. What we have here is a proposal that aims at unlocking part of the idle capital that lies in Zimbabwe. For those that know the history of what has been happening in Zimbabwe, we have had a period of hyperinflation whereby I think most of our financial intermediation has been destroyed. So most of your traditional products that relate to credit and all that become difficult. So at the moment, what we have is that we have a high demand of housing, a highly informalized market, which requires us to think of other ways for us to deliver houses. Unfortunately, in Zimbabwe, what we do is that in most cases, people don't like houses to be delivered. They prefer housing stands. So most of the developments that you find in Zimbabwe is that most of it relates to us providing housing stands, then people build on their own and their own pace. So what we have tried to do is to try to remodel when you look at the traditional funding model for development, you have your cost of land, your cost of construction, and your professional fees. And in most cases, what happens is that this is paid up front, either through debt or through somebody giving up money up front. And given the market that we are in, that debt is at up to about 20%. So what we have done is that we have mobilized landowners and construction companies that have capital so that they become part of this capital structure by contributing equity into it, so that the remaining amount that you get is what you then need to raise as debt. But we still have a challenge because the debt component at 20% is unsustainable. So one of the elements that has come through is that we have a large, due to what happened in Zimbabwe, a large population of Zimbabweans that are outside Zimbabwe. And one of the elements that we are trying to do is to mobilize those resources through pre-sales so that the component that we require for funding can then be used, can then be securitized by those pre-sales, which can be discounted with international funders at reasonable rates for us to fund projects that, that we find in Zimbabwe. So the idea is to use land equity, construction support from the construction companies, then have that also covered by diaspora remittances for us to be able then to have housing projects come through, through Zimbabwe. The idea is, because land is about 30% of the value of a project, if that comes in, it's coming in as equity, and you have contractors. Contractors in Zimbabwe, most of them have had to build capacity over the years, so they have equipment and everything else. What they do not have is working capital. And most of them are able to fund 40% of the project at risk, with 60% of it being working capital. So that's the component that we will then raise for us to develop the housing stands. The professionals, which total cost constitute about 12 to 15%, are also willing to come onto the table on a risk basis. So no one is being paid upfront, so that we avoid the high debt cost that you would have. Then the idea is that the 60% the 30% that we require to develop, to actually raise, we are going to aggressively build a diaspora book, which allows Zimbabweans in the diaspora to subscribe. Once they subscribe, we will be able then to use that to approach international funders for us to get funding on the back of that book. The idea is we'll build a book of, and for this part, what we've done is that we have, I think, worked with various organizations that have been going around in the various markets that Zimbabweans are in to actually get them to support, for them to buy their own stands so that that book can then be used to leverage on that. What this would do is that it actually gives us a conduit for diaspora investors to put up something into Zimbabwe. For your information, on a yearly basis, we get about 2 billion in remittances from the diaspora into Zimbabwe. And just a portion of that would allow us to actually do these projects. For our developers, this would allow them to actually kickstart some of the projects that have been mothballed. And for the landowners, obviously, it's something that would then allow them to actually mobilize the capital that they have that is limited. The idea is, at the first phase, when you look at this, as I said, Zimbabweans like housing stands, so we are going to focus on housing stands for the interim. Post that, we hope that if the structure works, it actually then allows us then to go to the next phase, which allows us to do superstructures, which now comes into the issues to do with your low-cost housing. Then after that, we hope that even if those diasporans that would have purchased homes in the first place, after they pay for the first home, they might also become the investors into the fund going forward. So what we have done is that we have mobilized, we have about 5 projects that have signed on, and the total land that these 5 projects have is in excess of 5,000 hectares, which allows us to do, and these are also located across different cities in Zimbabwe, which allows us also to reach a bigger market for us to do the project. What we require is that although we have structured it and they've signed on the contractors and the landowners, I think one of the key elements that will come into play if you do it in international markets is the technical assistance for us to get the legal structure to work. So you have Zimbabwe, where the land is. We have the people that are in the UK, Australia, Botswana. How do you structure that from a legal basis? So we actually need technical assistance from organizations that we can actually perfect the structure for us to be able then to institutionalize it. And post that, the next level that we would require is that once the book has been built, we then go on to get, to have that book discounted into the market. Thank you, guys. This was our presentation.
Kesia, next year, we must shorten the time. I haven't used my bell once. No, it's really disappointing. Four presenters down the line, and I haven't used my bell once. Cool. I'm going to give, once again, 2 questions, quick questions. No 2 questions in one. No. I'm going to shut you down there. 1 question, and then we're going to go to our, there's a question at the back there. And then a question at the front. Here, okay.
Thank you. So my question is about, first of all, great for thinking about the diaspora market. It's something that people have talked about for quite some time. You talked about $2 billion in remittances, and you're looking to tap a certain percentage of that. What expenditure would you be displacing? In other words, where's that money currently going that you'd want to divert to come into the housing structure that you're thinking about?
Okay, I can answer. So you'd find that most of that funding, most of it goes to support family, but most of the people in the diaspora are also doing projects back home. And the stories that you actually hear from them is that because they are not structured and these projects are being run by family in most cases, some of those funds are diverted, so they actually do not get. So you have stories of people that send money over the years. When they then eventually come back to Zimbabwe, they are hoping that there's a stand or there's a house that has been built and that hasn't gone through. So we expect, or we estimate, that probably about 20 to about 25% of that goes into some sort of an investment or capital project, which is being done back home, and we hope to tap into that, that amount.
Everyone thinks they can, until there's a guy at the back there who doesn't hear what you're saying.
Okay, noted. Thank you. Do you already have a data set of these diasporans do you already know those Zimbabweans in diaspora who are interested, who can immediately be part of this, and have they shown any commitment?
Okay, so what we have done is that a number of institutions in Zimbabwe have been going around doing market activation for projects, and what we are hoping to do is to write down to some of those, and one of those I think has been highlighted as CBZ, and I think in other institutions have gone out to mobilize diaspora funding for projects. So we are hoping to tap into property companies and banks that have already have that slip before.
If you come to South Africa, there's a few million Zimbabweans there, and they work very well and very hard. You've got a captive market over there. Do you want to comment? Or Deb, actually, Deb, you haven't made any comments in a while, like me not ringing my bell.
Sorry, you got the hard grader. No, I think this is kind of a holy grail. We'd all love to figure out a way to tap into this. So what I would like to suggest is that, when you do a pitch like this, I wasn't clear who you were pitching to. I wasn't clear who you were expecting to give you money and how much money and when you need it, what you've already spent. So when you do a presentation like this, I think you want to lead whoever's reading it, you want them to think, oh, well, I have a question, and then you want to answer the question. So what was happening to me is I had lots of questions, but they weren't getting answered. So I wasn't really sure, is the money coming from people buying homes? It sounded in the beginning like you were expecting the contractors and the professionals to work on a contingency basis. Like that was being treated as equity, and I didn't understand how exactly that was going to work. And I think a timeline, what does this investment vehicle, what does it look like? Do you have this set up? Do you have a picture in mind for what this is? Because at the end of the day, I didn't really know where I was going to be putting my money.
Thanks, Deb. Thank you very much. All right. Our next presenter is going to be Nesty, and as they come up, please remember, each table needs to make a vote on their best and their second best. Absolutely, yes. It's all in there. You even have merchandising, just like the branding on this one is proper. Okay. Yeah, you just.
Okay. Good afternoon, everybody. My name is Christabel Ojok. I am the co-founder of Nesty, and I'm here to show you the amazing things that we are doing with rent. So at Nesty, we're turning rent into a credit building tool. Now, in Kenya, over 5.2 million households within the urban areas are renting. So the problem that we've noticed is that most are entrepreneurs and people who work within the gig economy space, who are either freelancers or contractors. But then what happens is they pay rent, just like you and I, on a monthly basis, but they have absolutely nothing to show for it. And every time that they pay rent, this forms about 40% of their monthly income, and they continue remaining invisible to lenders, simply because they don't have credit profiles. So the irony is that for some of them, these monthly repayments would mirror monthly mortgage repayments based on the current offering that we have in the market from KMRC. So then we sat down and asked ourselves, what can we do as far as this problem is concerned? And we did a bit of research and figured if majority of people are spending up to 40% of their monthly income on rent, and these are millions of households, then how can we convert that rent to become a credit-worthy tool? So 4 months ago, that led us to building Nesty. So essentially at Nesty, what we are doing is, simply put, how you get started is that you pay your rent through the app. When you do that, that rental payment is tracked and verified to build what we call a rent score. So for the non-Kenyans in the room, majority of us, about 85% of Kenyans, pay rent via M-Pesa. So we track those rent payments, build a rent score, which then becomes a verified financial asset based on your reliability and not necessarily your employer. After that, on the app, we have financial coaching and deposit saving tools. We've partnered with a couple of fund managers because we understand the home ownership journey is a lengthy one that takes up to anywhere between 5 to 7 years to transition from being a renter to an owner. So what can a rent score do for you? Our goal is to ensure 2 key things. Number 1 is to give access to those who are left out to access homes through a tenant purchase scheme. We have a couple of innovations which have been presented this afternoon. And what's the interesting thing is that I noticed that all those could become potential clients for Nesty because of that rent score. So it can also be used as a de-risking tool when you're offering tenant purchase scheme homes. Secondly, our goal is to also boost mortgage eligibility for this large number of customers who are being left out. So who's our customer? We are building for the frustrated renter. This is somebody who's within the age bracket of 25 to 35 years old, and they're paying rent up to $350 per month. They live in urban areas, and they want value for rent. Now, when we started, we did some market research to identify how big is this problem. And what we realized, globally, there are a couple of other innovations in the market within the African continent. However, Nesty stands out based on those 4 key pillars. So the first one is behavior-based credit signal. What we're doing is we are tracking rental payments to build now a rent score. And what this rent score does is beyond, which leads me to my second point, beyond giving people opportunity to own homes, it can also improve credit profiles for those people who have thin credit scores. Thirdly, when it comes to deposit saving and financing, again, you have an opportunity to get started in terms of saving, simply because what we've realized is that one of the biggest barriers to home ownership is that 10 to 20% that is required as down payment. And finally, we are taking an ecosystem approach. So we're also leveraging AI to provide tools for financial coaching so that the customers on app get to understand what it truly means to transition from renting to owning, and consequently be included in that process. So we are creating multiple revenues. Now the first one is transaction fees from tenants when they pay rent. Those rent payments, as far as transaction fees is concerned, are tiered, the maximum being $1 per month. Then secondly, there's an element of tenant screening, and finally, we have about 1.5% commission on financing. So looking at the team, we are a dynamic duo whereby I'm joined by my co-founder, who comes in with the technology expertise, having worked in big telcos across several markets in Africa. On my end, I have a real estate background, both in property and asset management for the last 14 years, and I've also worked in a high-growth tech startup. So the journey leading up to this point began in December of 2022. So what we did, we launched a property and mortgage marketplace, and our goal was to reduce the house hunting process from months to minutes by pairing customers with affordable properties and affordable home loans based on their income. Again, because we all think that when you want to own a home, you can own a home worth X amount without having that knowledge. So we made it very simple for people to do this through the marketplace. And by December of 2024, we had done transactions worth $2.8 million. And at this point is when we realized we have a bigger problem. So we noticed majority of the customers were being locked out because they don't have a formal payslip. They can actually afford to make those monthly repayments, but they don't have a formal payslip. So we did a bit of customer discovery from January to June, and then launched the app in June of 2025. So this is where we are at as of this month. We have over 2,000 people who have downloaded the app. We've processed rent over 50,000, and we are growing at a rate of 94% month on month for the last 3 months. Our focus by the end of the quarter is to launch a mini app on the M-Pesa Super App, which gives us access to 13.5 million of their subscribers. Secondly, we are currently piloting with a number of property managers, as well as developers who have a database of 30,000 tenants. And we're also working very closely with the Credit Reference Bureau. Now, based on the theme of the conference, if you look at how Nesty blends within the theme of the conference, so one of the key things that a rent score does is that it acts as a de-risking tool. So through this, developers are able to assess tenants' risk using actual rental payment behavior, thereby reducing the risk of default by anywhere between 40 to 60%. The outcome, 10x increase in credit-worthy profiles for housing finance. Secondly, that credit unlocks through blended capital. So in this particular case, yesterday during KMRC's presentation, there was a mention of figuring out how they can cater to a certain segment of the market. And in this particular case, if you look at DFI-backed guarantees, those ones can enable banks to extend small home loans of up to $30,000 to verified renters. Again, what this looks like is it would be looking at 100,000 plus new homes within 5 years. Thirdly, there is the element of public-private allocation and efficiency within the affordable housing space. So Nesty, again, can be used as an objective data-backed allocation tool which can reduce defaults post-handover. And finally, there's financial inclusion for all those people who are left out within the gig economy. So RentScore integrated with CRB fills the missing data gap for 86% of the informal workers. And consequently, we have now 5 million plus new users within the continent. Now, looking at the bigger picture, if we were to do blended finance plus Nesty, how does that look like from a scalable aspect? So within 5 years, we'd have achieved tracking rent for 2 million renters. Then on an annual basis, we would be doing $360 million worth of transaction. Affordable homes up to 100.
Oh, you have made my day. All right. Yeah, you're on the flow, right? And then 10 minutes always looks like a lot. Ask the gents in the room. Okay. Any questions? 1 and 2. Okay, 1 and 2.
Thank you for the great presentation. I'm just curious, now that you have access to customers' profiles on their M-Pesa payments, so how do you take care of data protection? Because data protection is a very serious concern in this country.
Yes. So what we've done is, as we build, we are very keen on compliance. So we've registered with the Office of Data Protection, and we are both data controllers and data processors. And we also have a data officer within the team to ensure that data protection is something that we are very keen on and we're taking care of.
Well done on the presentation. I see the potential for including, or what's it called, catering to the informal market. So well done there. My question though, how far have you gone with your integration with credit bureaus in terms of regulatory compliance as well? Because I know there are issues there. And okay, let's scratch that then. What is your ask really? What is the return? What are you asking for?
Okay, we are seeking to raise $400,000 to achieve a monthly recurring revenue of $100,000 within the next 15 months. And as far as integration to credit bureaus is concerned, we've actually done that between the tail ends, whereby, so now sort of compliance is ongoing as far as remitting the rent payments to the credit bureau is concerned. So towards the tail end of that.
Which of my judges wants to make a comment?
Thank you. That was a great presentation. And great use of personas, I would say, in trying to understand the customers. I think for me, I would say that your proposition to the tenants was very clear. What I didn't see very clear is your proposition to developers or the CRB or any finance institutions who would then complement whatever you are propositioning to the tenants. So that did not come out very clearly for me. Thank you.
No. And you can go and sit down. Well done, actually. Yes. If my judges can come up to have a very short conversation with me, please come up on stage with your notes, of course, so that we can talk through some of the presentations. Just a big congratulations and a big well done to all the... Oh, come on. Give them a proper round of applause, guys. Thank you. Deb, please come up on stage. Jemuko, please come up on stage. Yeah, and we're going to have a quick conversation just about, you know, what it takes to really land a successful pitch in some of these investment asks. Can sit? Yeah. Can come sit? Yeah. They'll bring your microphone for you. Let me grab it for you. Quickly. So, Deb, you've already got a microphone, right? Deborah? You've already got a microphone. So I wanted to get a sense of what you think makes a good pitch before we start. Deb?
A good pitch. So you want to show...
Sorry, folks, if we can just give
3 words.
Deborah...
It depends on who you're pitching to.
Richard?
Know who you're pitching
sorry,
to.
Folks.
Number
Sorry,
one.
folks. Sorry. Sorry, can we just give the judges a little bit of our attention? I know you guys are discussing stuff, but just give them a bit of attention. Thanks.
Okay. Number one, know who you're pitching to and design your pitch accordingly. So if you're pitching to somebody who's knowledgeable about housing, you don't have to go through all the deficit stuff. Number two, be clear about your ask and show what money is coming in and what money you need, how much more you need, where it's going to come from. How much of it is in, how much of it is supposed to come in, and where is it coming from? So you're very clear about the money and the timeline for when the money comes in. So all the other things, I think everybody did a great job today with telling their story, but definitely the weak spot was that section.
Chibuke?
Yeah, not that much to add. I think there were a couple of people whose value proposition was not sufficiently clear. And sitting over there and watching, you could see exactly what it is that was the objective, but just presenting it and being very clear about it was a little short.
So this whole idea of storytelling is very important when you're pitching. So depending, you have to know your audience, you have to tell your story. And I think, Deb, you had made the mention of how the presentation looked great. You have to spend time on a fantastic and appealing presentation, right? But also the storytelling becomes so important, okay? So who are we, what's the value proposition, and then the ask piece, and maybe you want to comment a little bit about the ask. A lot of people put that at the end, and then they've got little time, right, to get to. And when you think about an elevator pitch, you know, you've got 3 to 5 minutes to land a proper pitch. We gave you 10, and still people couldn't get to the ask.
Yeah, thank you. I think sometimes when you're pitching to somewhat impatient investors. They don't have the time to listen to stories, and the stories are good. So it's about going directly to the point, but not just for the sake of it, but communicating in a way that makes sense. And I think leveraging on the conversations that have been happening during this conference, even as we talk about concessional funding, we agreed that it's not easy money. There is hard work to be done. And therefore, how are you going to be convincing? Because they are asking, being able to communicate very directly, communicating all the major points they are looking for in terms of return on investments, but also in terms of the market that they care about, and validating your claims. It's not just saying, I'm focusing on this market. The question is why and how.
Absolutely. You look
Yeah,
like
I
you
was
want
just
to
going
say
to
something.
comment that I remember being taught that it's the why first, then the what, and then, oh no, now you've confused me. Why, what, and how? Yeah.
Maybe just some of the comments you want to share about some of the presenters, just high level,
Okay.
just takeaways.
Okay, very high level, not mentioning any particular ones. I think that there were a couple of those presentations that were exceptionally eye-catching. And not just eye-catching, but also very clear. Very clear. You didn't have to say much to read the story, sometimes from images and very few words. And I think that that is excellent because you often find that you have two types of people. There are the people who are happy to read, and then there are the people who can read from graphs, pictures, and stuff like that. So that's really important. I think, again, that you should put your ask ahead. It's always, you can reinforce it at the end, but it's a shame to have time spent 10 minutes or whatever and then not be able to get to your ask. So start with the ask, and then you can explain why you're asking for what you're asking for and how you're going to achieve what it is that you want to achieve.
So I like that, and I was thinking about it, that we've done this now for 3 years, and every presentation we've ever seen, I think only one ever took the ask right to the front and then explained with the story why the ask is that, and then reinforced it again when there was time right at the end. So I think as we think about some of the projects that any and everyone here might be looking at, think about your ask first. Articulate that very clearly. How much? Where is it going? When is it coming back? What are you going to do with it? And who's then the target market? And then start your story and then reinforce it a little bit later on. Deb, you spoke earlier on about creating a question and then answering it. That for me was really, really catchy. Is that as you tell your story, you have to create the question, and even before you can, as an investor, sort of formulate the question, the presenter is already answering it. I don't know if you want to expand on that.
So it's an exercise where first of all, you know who you're pitching to. So you know what their interests are. You know where they're likely coming from. You should, anyway. And so you should be able to anticipate in advance what kind of questions are likely to ask. And you want to give them space to think of those questions and get their brains engaged in the process of what you're talking about. So that's why you don't necessarily need to put everything on the page and say everything about your deal at every point. On the other hand, I was going to mention about the Cape Town presentation. That's an example of a presentation where there was a ton of information. There's so much information, but almost too much because I couldn't, absorb it all. But the information about, okay, this is a great project, where is it in its development cycle? Is it ready for money now? What money has gone in? How much investment has been made so far? What's the timeline for additional funds coming in? The first phase, you're raising money for the first phase. Okay, what happens after that? Does all that good stuff that you're talking about in the beginning of the presentation, does that happen in the first phase? Probably not. So there were a lot of questions raised there that I had early on that I think could have been answered with a timeline kind of a slide.
Thanks, sir. Mutua, you're feeling just the 5 presentations, what for you, just high level, were the things that really blew you away and things that you really wanted a lot more of that didn't really come through?
Yeah, I think all presentations were good in the sense that good work was put in, and all, can we call them the blenders? All the blenders picked on the key points. I would say, as per my comments, sometimes the question is, I know figures are important, but you also want to present a compelling narrative, but not overdo it. So sometimes, you would start with a story, but halfway people are bored because you want to be compelling, but not too compelling. I think the use of slides, sometimes for me, some of them were moving too fast before especially the ones with the numbers, because I want to internalize. I'm trying to ask, okay, you're asking this figure, this is how you're going to spend it, this is how you're probably going to be repaying, this is how the income is going to be generated. And then as I try to, the slide moves. So again, it's also knowing where to pause and emphasize a bit. And that means that sometimes less is more. You don't have to say all these things. It's about what are the critical points that you want to communicate and focus on that.
Thank you. I am going to allow you to go step back and contribute to who wins. Thank you very much for your contributions. Always insightful. Thank you.
Nice job, guys. It's really scary to present to your peers, so I respect you for doing that.
Indeed. I'll have that. Thank you. Yes, but I'll take a handshake properly. Thank you very much. Okay, how far are we with the judging? Is it a hard debate? Okay, cool. We'll give you another 5 minutes, right, to deliberate and make a decision. 5 minutes.
What I'm doing is collating. And then I'm putting them, I've torn them apart so that I'll figure out who wins on the desk and who wins on the runner-up. Okay. Yeah.
But your heart. But your heart, you know?
Totally.
So
It captures you.
you can go and do credit card, but on the side, the things that really move, the things that, the news comes up and there's a housing thing, you're like, okay, let me,
Yeah, no, exactly.
Beatrice. Your time is running out. Are you guys done? Like, come, move. You're now debating. Move. There's a lecture situation happening there. Looks like there's a lecture. Are you guys deciding, or what's your story? Have you decided? Have you decided? You must decide. You must decide. Come. Lusanda, did you decide? Oh, you did? Okay. Okay. Yeah, it helps when you don't have anyone at your table. No debates. All right, folks. We do need to wrap it up. We do need to wrap it up. And then the adjudication can start. Kesia, please go around to all the tables and collect. Okay. Tandiwe, please come and fetch this side as well. Let's divide and conquer. Richard, are you done? Have you submitted? These South Africans. Okay, sir. Tandy, is this table done? Yeah. Which table is not done, except for this one, I know? Who else is not done? Come, guys. Are you done? Are you guys done? Good. Beatrice? For people who took forever, they sure didn't write anything. Yeah, so in order of presentation. Sandy. All right, folks, if you haven't handed in your paper, it is now not going to be counted. Tandiwe, I am shutting it down. When I ring my bell, that is it. Okay, you're not going to be counted. Tandiwe, I'm closing. Done. If it's not in now, we're not counting it. Okay, we have our results. We have our results. But I wanted to give maybe one or two people just to comment on their winner and why. Any volunteers? Any volunteers? No. Jeepers, you guys are a bit scared, eh? Okay, cool. I'll leave you alone. Okay. Is Sharon? Oh, Sharon's
always got something to say. I'm not sure it was our winner because I didn't see the card, but I really appreciated all of us in the housing sector, evaluating and quantifying rentals in the informal sector. It's easy to quantify rentals in rent-to-buy projects, like in Zimbabwe, but to quantify rentals in informal areas is a very, very valuable tool.
Thank you very much. Okay, we are going to start with the second. So our runner-up, having been, some of the comments around our runner-up was innovative, useful for rental, combining DX and solving social issues is very innovative and unique. And our runner-up is Nesty. Do we have anything? Do we have anything? Do we have anything? No, you can ring the bell. Come in. You can ring my precious bell. Okay. And our winner, and I promise I had nothing to do with this. Their pitch was, their ask was up front. Your handwriting needs some improvement, guys. Clear figures, competent and track record, clear technical and financial framework, and that goes to imizamo yethu. And challenge accepted on innovative home loan products. Challenge accepted, right? And you can come knocking on my door at FNB in South Africa. You can ring. Okay, you can ring my bell.
Thank you very much.
Well done. And that is it for me, from me. Thank you very much for being such a wonderful crowd. And over to Kersia.
Thank you very much, Mfundo. Mfundo is the secretary of the AUHF board. And thank you very much for managing that. It's now become a tradition. For all of the participants in the blender, thank you so much for putting yourself out there and presenting it. And I have to tell you, even, well, from my perspective, as the executive director of CAF going through fundraising myself, I got a lot of tips. Thank you. What we're going to do as CAF and as AUHF, we're going to put out, obviously we'll put out a press release tomorrow and we will announce that. We will put all of your companies on LinkedIn and we'll name who the winners were. We will take the information you gave us and put that into separate posts, which will also be on our website and acknowledged and identified, so there will be publicity for you. And we're really excited to know about you, and we hope that we get to hear more as your program grows and evolves, because all of them were so interesting. And it's so nice to see how the presentations and the pitches are changing over the years, hey? Really, really interesting innovation that's happening. So thank you so much. I would recommend the comments, handwriting or not, are really good. So they're here. And if you want to come and fetch the comments that have been written for you, you can take that and take a look afterwards. Now, breathe deeply. It's the end of 4 days. Holy cow. Is Kehinde in the room? There we are, our chairman of the African Union for Housing Finance. Please, if you haven't yet signed up, sign up now. And I will give it to you to release us. Thank you so much.
Thank you, everyone. It's been a wonderful conference, and as they say, all good things must come to an end, and so must this conference. I just have a very short speech. As we come to the close of this remarkable conference, I want to express my heartfelt appreciation to everyone who have made these past few days engaging and impactful. We have listened, learned, and exchanged ideas that will no doubt shape our collective progress in the days ahead. The discussions have been insightful, the exchanges thought-provoking, and the connections forged invaluable. To our distinguished speakers, panelists, thank you for sharing your expertise and inspiring us with your perspectives. To our hosts, sponsors, and indeed the Secretariat, your hard work behind the scenes have made this conference a resounding success. And to all our participants, your active engagement and enthusiasm have brought energy and meaning to every session, including this last one. As we leave here today, let us take forward the lessons learned, the relationships forged, and the commitment to continue driving positive change in the housing sector. On behalf of the Board of the African Union for Housing Finance, I thank you all for your contribution and participation. We wish you safe travels and look forward to seeing you in Lusaka, Zambia. Thank you all.